For more on Tesla, let's bring in a major Tesla bear. Welcome Gordon Johnson, CEO and founder of GLJ Research. And I'll just point out, Gordon, if you weren't an analyst, if you were running a hedge fund, you would have been broke so long ago from Tesla. You would have been trying to cover your shorts so long ago and borrowing money and losing billions of dollars that you wouldn't even be on probably. But you're not. You're an analyst, and you make the case. You've been making the case for 600 or 700 points that Tesla shouldn't be at these levels. Do you feel like it's going your way all of a sudden, given what these other things we're seeing, Gordon?
I do, and I think that you got to look at what's happening with GameStop. What's happened with GameStop over the past 4 days is essentially what happened with Tesla over the past year. You have essentially, guys coming in and using call options, which allow you to purchase much more stock than you otherwise would to press the shorts. You've heard SoftBank come out and say that. But with respect to the quarter, the quarter was extremely bad in our view. If you look at what happened, their gross margins fell by about 400 basis points. They're guiding 2021 to about 749,000 cars shipped. And they said they're going to have about 1 million cars of capacity, so they're going to be significantly below. You look at what happened with respect to the overall revenue situation, right? You had in the fourth quarter, they shipped 41,000 more cars than they did in the third quarter, but they had a profit that was down $30 million quarter over quarter. So they're shipping more cars and making less money. Why? Because they cut prices 15 times in 2020 to move volumes. Listen, they are not production constrained. That's a major misconception. Their capacity as of last quarter was about 840,000 cars. They sold 499,000.55 cars for the full year. So they're not selling out their capacity, and they're losing significant share in Europe and China, again, despite the price cuts. And again, you're seeing with respect to their margin deterioration and the fact that they're, making less money, it's not panning out for them. So I think a lot of the things that we've highlighted are coming to fruition, and I think it gets a lot worse to them as we look through the rest of this year.
Gordon, I just think the comparison to the GameStop, what we're watching there is kind of strained, though. Would you agree? I mean, GameStop started with a valuation down in single digits in terms of I don't know, was it even worth $1 billion at the beginning? It was worth maybe over $1 billion, but now it seems extended. Maybe it's not, but it's way up at 35 or 40 billion. But this is an $800 billion company that obviously makes a great product. You see them everywhere, and it has a great story to tell about. You saw President Biden yesterday was climate, and John Kerry's climate. So I just don't know if you can really make that comparison. But you think it's cut from the same cloth. You think what we're seeing in Tesla had already happened, and now we're seeing it move out the risk curve to other companies?
Listen, Joe, it's 100% happening. SoftBank came out and said we brought $1 billion worth of call options to force stocks higher, and they specifically mentioned Tesla. Listen, the Fed effectively putting money into the market and effectively lowering the cost to basically for market makers to lend out call options has allowed this to happen. If you allow this to happen over a year, if GameStop keeps going, it could go to $800 billion. So my point is, yes, this has happened, and it's been stated that it happened. SoftBank said they did this. I think one other thing with respect to Tesla, you say they have a great product. They're less than 5% of global automotive cars out there. They're not even 1% of the total automotive cars out there. And again, this quarter, they lost money excluding credit sales. They lost money. If you take away the credit sales, they lost money again. So they're not making money selling their cars.
Think of what they do when they start taking more of that market share, Gordon. That might be, look at that half full, not half empty. They got a lot of growth still possible. Anyway.
Shepard Smith here. Thanks for watching CNBC on YouTube.